In our heavy oil business, we've literally transformed our coal mining operation. We've lowered the unit costs by more than 30%. That includes deploying a wide range of technologies, one of which is we are the only company to have 100% autonomous heavy haul vehicles in the mining operation in Canada. And we did that while growing the average production to 280,000 barrels a day at Kearl. And as Imperial have talked about many times, we're frequently getting daily rates into the 300s and even weekly rates into the 300 KBD.
Welcome to On the Edge from central Tokyo. On the Edge is for educational purposes only and is not investment advice. You can read our disclaimer at inkresearch.com. We kick things off with Neil Chapman, who is a senior vice president at ExxonMobil for upstream, and he was talking at their investor day last week about their plans for 2025, and he was touting the work that Imperial Oil had done to drive efficiencies at the Kearl Oil Sands project, where their mining fleet is now fully autonomous. Unfortunately, that did not help Imperial Oil stock on Thursday when it revealed its 2025 budget for exploration and CapEx. Expected midpoint $2 billion. That's up from $1.7 billion that they projected for 2024 last year at this time. Now the stock fell 6.7% on the day on Thursday, but as we reported on Friday, in the morning report, the CEO is buying. He also bought on Friday when the stock continued to fall a bit. Now, what is on the minds of investors right now in the Canadian oil patch? Well, we've got the usual clouds around the oil patch about global supply and demand, but also on Thursday there was a story from Bloomberg that came out which reported that Ottawa was considering an export tax on oil producers and uranium producers in Canada as part of their strategy to deal with the Trump tariff threat. Now, things are tough enough in the oil patch as it is. Why are we getting this type of story coming out of Ottawa? Now, this is a story. It's not, no official announcement has been made, but it's enough of a concern because, frankly, it is a very bad idea. Now, one reason why it's a very bad idea, besides I think it's always a bad idea to tax, add extra taxes on your own country when you're in a trade dispute, is that there seems to be an assumption in Ottawa that this is a bit of a negotiation with Trump, that tariffs are a negotiation and that we have to play hardball with them. But what if it's not a negotiation? What if tariffs are actually the policy objective and tariffs are coming whether we like it or not? And that's the case that economist Juliet de Klerk made on Monetary Matters, Jack Farley's new podcast series, which is a must-watch if you're into following macro trends. And she makes the case that tariffs are likely a policy end, not a means for the Trump administration.
So for me, I think markets are not worried enough about tariff. Many are seeing tariff as a kind of bargaining chip, especially when you're talking about Europe. So some are talking about like 10% tariff, some are talking about 20%. On China, it would be 60%. For me, I would really like to remind everyone that one of Trump's idols is like Mike Kingley, who basically was heading the US at a time where most of the income was coming from tariff rather than income tax.
Now, if Juliet de Klerk is right, and Trump is following in the footsteps of William McKinley, that U.S. president who finished the 19th century as U.S. president, that's when tariffs were a bigger driver of Treasury revenue than income tax. So tariffs look like they're part of a plan by Trump to reform the tax system. And if that's the case, then the tariff train has left the station, and all the hardball that we throw at him is probably not going to change things a lot. So why would you take this kind of an approach on threatening a tax, an export tax on your own industries? It doesn't make a lot of sense, particularly when you if you come to the conclusion that Americans are likely to eat a lot of a tariff on energy products in Canada. Gas Buddy tweeted out, posted on X, some interesting information about how the supply chains are pretty much set to accept the Canadian crude. And of course, things could change over time, but at this point, it's not looking like the Americans could, escape eating at least some of those costs of those tariffs. So why would we be taking this potential course of action of hurting our own industry? And here in Japan, the Nikkei newspaper put out a study taking a look at the impact that these tariffs, the Trump tariffs, would have, including the 25% proposed on Mexico and Canada, on different trading economies. And they found that the tariffs would have about the same impact on Canada as the US. So it doesn't make a lot of sense to me why Ottawa is kind of publicly hitting the panic button here when it looks like the Americans are on a path of changing their tax code and adopting policies that basically, no matter what we do, they're going to do it. So isn't the trick to get our economy more competitive? Shouldn't we be making Canada more competitive as opposed to trying to punish industries that are working hard to become more competitive? Now, that would mean doing something like, I don't know, reforming the tax code. If that's what the Americans are doing, maybe we should do the same thing as well. And that means going beyond sort of these whimsical changes that we're seeing in Canada right now, a 2-month GST holiday on junk food and alcohol. I mean, this is not a serious policy, and we need a serious policy for serious times. There's lots of changes going on in the world, and we in Canada need to be serious about how we're approaching them. So we'll have to see how the oil patch fares here. The oil patch has been through a lot. They're pretty robust, pretty strong group of entrepreneurs in the oil patch, and entrepreneurs and oil patch insiders still seem very upbeat about the prospects of the industry, despite the fact that it seems like Ottawa is the bigger threat right now to the oil patch than Washington is. Now, some industries will do better or relatively less worse under tariffs than others. So we're going to keep an eye on those in our morning reports at Inc. and other reports that we put out. In the morning report that kick off this week, we're looking at an alternative medicine stock. It's a small industry, alternative medicine, but at least the domestic industry should be fairly insulated, one would think, from a tariff situation. Other industries, it's a little bit more complicated. Gold miners, for example. Gold mining is a tough business at the best of times. We talked about Augusta Gold in the last edition of On the Edge, and unfortunately on December the 5th, Tariffs announced that it had a tragic mine accident where 2 employees and a contractor were fatally killed. Operations at its mine are currently, as I'm shooting this video, we're under suspension while authorities do their investigation. Now, management's done a pretty good job keeping everybody informed about what's going on, so we'll have to watch the news flow from Torex. But so far, they haven't changed their guidance for the year, but we'll have to stay tuned on that. Again, it's all how in mining, it's all a lot of it's about management and how they deal with these curveballs that come their way. Now, we're seeing different action, different directions of stocks in our rankings. Torex is still hanging in there. On the weekend, we did note that Canadian-focused New Gold had its ranking slip. It's down in the bottom 30% now on the back of some insider selling. Now, a lot of other miners, though, are doing quite well in our rankings. We've got over 20 gold miners in the top 10% of our rankings, and one of them is Augusta Gold. Richard Warwick's Nevada-focused junior. It put out a feasibility study recently on its Reward project in Nevada. It's 7 miles from its main Bullfrog project, and so that stock's one we're keeping an eye on in the gold space. The gold space is also benefiting from M&A activity. Just last week, O3 Mining received a $1.67 per share offer from Agnico Eagle, and apparently O3's major shareholder Gold Fields is going to support that. And Gold Fields itself became the major shareholder in O3 through its takeover earlier this year of Osisko Mining. So there is a lot of positive activity going on in the gold mining space, where they'll be confronting, these crosswinds of potentially a stronger dollar, at least for now, but also there's no end in sight of a large U.S. budget deficit, which would be supportive of the gold space. One industry that could do relatively well in a tariff environment is financial innovators. Services are not subject to tariffs as far as we know so far. So we're going to keep an eye on Canadian financial innovators. And so in the ink spotlight today, we look at VersaBank. VersaBank, we've highlighted many times in our morning reports over the years, and it's a stock held in our household, and it's about to expand its point of sale receivables purchase program in the US following the receipt of its banking license this summer. It's been a fairly successful program in Canada, so now it's going to be embarking on launching that in the United States with partners it's in discussions with. And it also has a cyber security division, which if the Trump promises of kind of freeing up the crypto space and allowing crypto projects to gain some traction, unlike the Biden administration that was really put a wet blanket over the whole industry with its regulations, there's a possibility that area could see some more traction. And VersaBank also has a digital deposit receipt product, which if the Trump administration pushes forward some areas of stablecoin development, stablecoin regulation that promotes stablecoins. Now, stablecoins are where the digital asset is pegged 1-for-1 for the US dollar, either through backing of government securities, or potentially it could be through private securities. So we'll have to keep an eye on what is happening in that space, but that's another area that VersaBank could be positioned for. So outside of the financial innovators, there is also the crypto space, which I guess one could argue is also financial innovation, and we're going to be keeping a close eye on the crypto equity space. At the end of the month, we'll be releasing our top mining and crypto equity report, and we'll be seeing some interesting developments there. We're seeing a lot of crypto equities in Canada moving up our ranking, so that'll be a space to watch. So that about wraps it up for this edition of On the Edge. Thanks for stopping by. And if you'd like to find out more about using Inc. research tools and services, check out the links in the description, either via Canadian Insider Club or our Premium Inc. research service. Thanks for stopping by.